Hey there, welcome to the channel today. In the world of cryptocurrency, it's either Bitcoin or the rest, and you would agree with me that this is so because Bitcoin remains the most common cryptocurrency in the world. To further demonstrate this, if you were to conduct a survey and ask people who have little or no ideas about cryptocurrency to name any coin, I'm very sure the majority of them would pick Bitcoin. Investing in Bitcoin has proven to be one of the most successful forms of investment in the crypto space. Everyone wants to invest in Bitcoin even if it's as low as $100. However, there are 5 common mistakes that people make with Bitcoin that we hate seeing. In today's video, we shall be looking at them and how to make sure you aren't sabotaging your crypto success. Before we get into it, be sure to subscribe to our channel and hit the notification bell so you can get fresh content as soon as we upload. Also, make sure to check out the link in the description for my best recommendations when it comes to making money with cryptocurrency. Now let's get into it. There are over 56 million registered users on Coinbase, and the search result for Bitcoin on Google has reached an all-time high in the past month. It is safe to say that the popularity of Bitcoin has never been greater for this digital asset. Yet, analysts are still divided on their opinion on Bitcoin in the crypto world. While some see it as the future of money, others see it as an impending bubble. But in all, the inflow of investments that come from institutional corporations and investors have all helped in raising the sentiments of investors about Bitcoin. Unlike the stock market, currencies, and other assets, cryptocurrencies like Bitcoin are speculative network effects and market reports. Here's an instance. Earlier this year, the price of Bitcoin surged from $40,000 to an all-time high of $70,000 after billionaire Tesla owner Elon Musk announced that payment for his electric cars can be done via Bitcoin. However, the price pulled back below the $40,000 mark from an all-time high position after Elon Musk expressed concerns over mining Bitcoin through non-renewable energy sources. Market analysis has been finding reliable on-chain metrics to value crypto coins, but it's still not obvious whether buying or selling Bitcoin based on technical factors is a good idea, which is mainly based on historical patterns and trends. Future performance are gauged through fundamental factors, and this is a common approach. Whichever method you approach, the prospect for sabotaging your crypto success increases when you make the common mistakes we hate to see with Bitcoin. I'll be sharing these mistakes with you guys in a moment. Okay guys, of the common mistakes we hate to see, forgetting your risk tolerance comes first. Most crypto analysts give a very common advice to investors, which is to invest what you can lose, or in other words, do not invest what you don't expect to lose. Investment is all about winning and losing, but you can control your losses by astutely allocation investments along their level of tolerance to risk. Buying Bitcoin and pulling out your other investments can be a really unwise decision on so many levels. Instead, here's what you can do. Stick to your long-term investment while you allocate a small percentage of your portfolio to speculative assets. This is a prudent general strategy. So one thing you can be sure of, guys, is when you always remember your risk tolerance, you won't be sabotaging the success of your crypto investment. Next up on the common mistakes that we hate to see is buying based on speculations. One of the worst mistakes you can make as a Bitcoin investor is to buy based on speculations. Most times, it can lead to buying high and selling low. A lot of newcomers just want to ride the rally and make profits without thinking about what the future holds for Bitcoin or what factors are driving the price of Bitcoin higher. Earlier this year, we saw that speculation about the massive level of crypto adoption as well as broader crypto market rally pushed both retail and institutional investors to buy Bitcoin at a higher price. Crypto markets are volatile and it's quite difficult to predict the future price movement. Investors who had bought Bitcoin during its surge lost money following a surprise collapse in crypto markets, which is blamed mostly on a ban on Bitcoin from Tesla. Increasing Chinese regulations and uncertainty contributed to the sell-off. Most times, investors do not make an exit strategy before they buy, and this is also another common mistake. Buying an asset like Bitcoin without having an exit plan could be a disaster. You must put your stop losses in place, while also ensuring you have a mental framework planned in advance to accomplish your primary objectives. As an individual, you cannot let the losses mount if the environment of the market keeps getting tougher. Exit strategies help investors to mitigate extreme losses. On the other hand, having an exit strategy is key even if you are winning the bet. Investors that do not have a vast knowledge of market psychology could also lose their money when they don't sell on the rise due to expectations for further price growth. Having knowledge of the right time to sell is the best approach for capitalizing on gains or squeezing losses. I'm sure this should be the most common mistake with Bitcoin that we hate to see: lack of patience. Whoever said cryptocurrency was easy? Truth is, it's not, and it's also not a get-rich-quick scheme. Most investors who venture into Bitcoin do so with an idea that they can get a huge return in a very short time. Truth is, this is very possible with other new altcoins. But with Bitcoin, it is very different. You need to be really patient, after all, it is an investment. Bitcoin is a perfect example of a stable coin. The growth of Bitcoin is heavily dependent on market news, policies, and sometimes, stock market. So being patient with your investment is better than rushing to sell off due to impatience, which causes loss in most cases. Lastly, another mistake we hate to see with Bitcoin is investing in it alone. While it is true that Bitcoin is the most stable coin, the cryptocurrency market is very volatile, and spreading your investment across multiple coins might just be what you need to stay safe. Remember when Bitcoin was dipping a few weeks ago? And coins like Matic and Cardano were doing so well? Now imagine you had all your investment in Bitcoin. See what I mean? So yeah, you might just want to consider spreading your investments to coins like Ethereum, Ripple, Cardano, and others. Okay guys, so that's all for today's videos. I'm sure you've learned a lot. If you have any contributions to today's video, perhaps maybe I missed some important areas I ought to have talked about. Or you have questions regarding any area of the video? Head straight to the comment section and drop your comments. I look forward to seeing them. If you're looking to learn more about finance and investing topics like this, stay tuned for our next videos. Also make sure to check out the link in the description for my best recommendations when it comes to making money with cryptocurrency. Don't forget to smash that like button, subscribe to the channel, and hit that notification bell so you don't miss out on anything. See you next time.